You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 16th day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is our live training room. That one is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, you can do so by going to mytradingiq.com. At the very top of the page, it says 5-day free trial, no credit card required. Just click that link, fill out the registration form, hit submit, but make sure you fill it out properly. In most cases, what will happen is same day, we'll get your desktop set up, get your indicators indicating, and then your trial will start the following day. Now, tomorrow's Friday, so you're thinking, wow, I should wait until Monday. No. Go ahead and get set up today. Tomorrow will be the first day. The weekend doesn't count against you. Then you get 4 days next week. So really, you're turning a 5-day free trial into a 7-day free trial. Now, you might say, well, what good are the indicators to me over the weekend? Well, they're markets that do not sleep. True story. And it'll give you an opportunity to get familiar with the indicators. So again, when you click that link at the top of the page, mytradingiq.com, make sure you fill out that registration page properly, because it's an automated process, and if you don't fill it out properly, we won't get it. You won't get a free trial. Nobody wins. If you fill it out properly, then everybody wins. Okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the afternoon broadcast. There are 2 different ways you can join this afternoon broadcast live. The best way is you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says afternoon broadcast. Click that link, fill out that 30-second registration form, and you're done. Going forward, what will happen, every trading day, you'll get an email about an hour before this broadcast starts. So, at 12 noon Eastern, all you have to do is click the link that's in that email, and it will automatically log you into our platform. The benefit of that is you'll have access to the question box so that you can ask questions and participate in the discussion. Now, there will be days when you're out of the office, away from your desktop, but you still want to join live. You can. And there'll be days when you're busy and you can't join live, but you want to get caught up later. You can do that too. Talking about our YouTube channel, which is easy to remember. youtube.com/CFRN. You already have the YouTube part memorized, so all you have to remember really is the CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Now again, the first broadcast of the day, that's members only and those taking free trial. This afternoon broadcast is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. So let's get going and open with our daily devotional and a word of prayer as we do each day. Then we'll get into the markets. Then about 12:45, Michael will join us. He'll give us a recap of everything that happened this morning in the live training room. And then we'll go live on the TradingView platform for 30 minutes, do some live trading. And then I'll wrap things up with our good word for the day. Now, the topic of this week's devotion, faith works. It's basically a study on the book of James. Our scripture today is James chapter 1, verses 19 through 27. And I'm going to share with you from the Message translation. Post this at all the intersections, dear friends. Lead with your ears, follow up with your tongue, and let anger straggle along in the rear. God's righteousness doesn't grow from human anger. So throw all spoiled virtue and cancerous evil in the garbage. In simple humility, let our gardener, God, landscape you with the word, making a salvation garden of your life. Don't fool yourself into thinking that you are a listener when you are anything but letting the word go in one ear and out the other. Act on what you hear. Those who hear and don't act are like those who glance in the mirror, walk away, and 2 minutes later have no idea who they are or what they look like. But whoever catches a glimpse of the revealed counsel of God, the free life, even out of the corner of his eye, and sticks with it, is no distracted scatterbrain, but a man or woman of action. That person will find delight and affirmation in the action. Anyone who sets himself up as religious by talking a good game is self-deceived. This kind of religion is hot air and only hot air. Real religion, the kind that passes muster before God the Father, is this: reach out to the homeless and loveless in their plight and guard against corruption from the godless world. Again, that's James 1, verses 19 through 27 from the Message translation. True belief causes Christians to live out their faith according to God's word. We don't passively hear the word. Rather, action should always follow genuine heart change. The one who merely hears the word and has a lifestyle that is characteristically against doing what he hears has not truly received the gospel. Many scholars have called the book of James a commentary on Jesus' Sermon on the Mount. They mean that James uses similar language and images to describe a life of true faith. The Sermon on the Mount concludes with a famous parable about building a house. This is the heart of James' letter: hearing and doing. faith expressed in our works. James left no room in his letter for the idea of hearing the truth and not doing what it says. He didn't want his readers to deceive themselves into thinking they could be Christians merely by believing the right things about Jesus. Following Jesus requires action. As a disciple, you not only have to believe that Christ is worth following, but you also have to take steps of faith to deny yourself, pick up your cross, and follow him daily. That's Luke 9:23. Being a doer has two components: putting away filthiness and seeking pure religion. The word religion gets you bent out of shape. Set aside your personal interpretation of what that means. James was talking about a devoted life that's pleasing to God. Join me in a word of prayer. Heavenly Father, in humility we come before you, recognizing the wisdom found in your word. Help us to be quick to listen, slow to speak, and slow to become angry, following the guidance in the scripture we just read. Grant us the grace to receive your word with meekness, allowing it to take root in our hearts and transform our lives. May we not merely hear your word, but also put it into action, being doers of your word and not hearers only. Lord, help us to care for the vulnerable and needy, keeping ourselves unstained from the world. May our lives reflect your love, mercy, compassion for all those around us. Guide us by your Spirit as we seek to live out your word daily, shining as lights in a world filled with darkness. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. And happy Thursday. Thursday it is members only workshop tonight, 8 p.m. Eastern. So if you've been on the trial and you want to be in the workshop tonight, you should have received an email already explaining how you can do that. Otherwise, give us a call at 949-42-EMINI or send an email to support@cfrn.net. Okay, here are the numbers from around the world. Start in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow's up 78 points. NASDAQ is up 19. S&P 500 is up 8. But the Russell 2000, our man in the street, is down 7. In the commodity basket, crude oil is up 69 cents, trading 79.30 last. That's a gain of almost 1%. Gold down $10.60, trading 23.83 last. Silver up 13 cents, trading 29.86 last. In the Asian markets at the close, the Nikkei posted a gain of 534 points, over 1.25%. Shanghai rose 2.5%. The Hang Seng gained 302, which is over 1.5%. In the European markets at the close, FTSE down 7, DAX down 130, CAC down 51. So that gave us a green day in Asia. It was a red day for the UK. And it is a mixed Radio Thursday here in the US of A. 3 of the major indices in the green, the Dow, the NQ, and the S&P. But the Russell, which sometimes will lead the other markets, is slightly in the red, but only slightly, roughly 8 points. So, I'm going to put you on hold for just a second. Be right back. And we'll get into the Logic 247 alerts, the Concierge Trade alerts, and we'll take a look at the charts. So sit tight. I'll be right back. And we're back. Sorry about that. Same technical snafu as yesterday. All right, Logic 247. Basically where we were yesterday. We're in week 302. Over the last 302 weeks, we issued over 16,700 individual handcrafted alerts. We've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, this morning when Valor did the recap at 6:30 a.m., there was a total of 26 alerts issued. Still waiting on 23 actionable alerts, of which 7 or 30% would have been stopped out. Again, based on market structure and that simple 3-step process we teach all of our passport holders. Now, long before we had the logic alerts, that was 302 weeks ago, about twice as long, we had our original alert service, the concierge trade alerts. And they're a little bit different in a couple different ways. Logic alerts can come out anytime, around the clock. Futures trade around the clock. We have traders around the globe. But the CTAs are published as a static report shortly after the Globex open each evening. Typically, they're out by about 6:10, 6:20, 6:10. Last night, we're running a little bit late, 6:55. The Thursday session began last night at 6 p.m. Eastern. So we were through the first 2 30-minute candles almost when the report came out. Now, when the report comes out, the first thing you do is make a note of where price is on your 30-minute chart of whatever markets you actually trade. It's always going to be between these two numbers. Once you've made a note on your 30-minute chart, draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. The BBC is the green line you'll see on my charts. BBC stands for bull, bear, cross. When price crosses above the green line, then we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Always relative to whatever time frame you apply it to. As for the alerts, both the logic and the CTAs, it's always the 30-minute chart. With the logic alerts, you get an entry price, an initial target, and additional targets. Those come from me looking left for you to spot potential obstacles. The CTAs, you start learning how to look left yourself. The whole purpose of the alerts is to help you become self-sufficient. If your goal is to trade for a living, that'll never happen as long as you're dependent on someone else to tell you when to get in and when to get out. You've got to learn to read the chart. Also, you will learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone from the moment the markets open Sunday night till they close Friday afternoon. If price is above the 30-minute BBC, it's trying to reach the zone above. If price is below the 30-minute BBC, it's trying to reach the zone below. Publish the zones every week for almost 15 years, going all the way back to December 14th of 2009. Once you understand how price behaves at a weekly zone, they will become one of the most important tools in your trading toolbox. You simply have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, as we talked about on Monday, we anticipated the CPI numbers that came out yesterday to create some wild swings in the market, and we have a new all-time historic high. So we're going to grab our fib tool here, make sure it turns into that, and then move it up to embrace the new high. Now the previous all-time high was 53.33.5. It's now 53.49. So we'll see how close we can get it. Well, that's pretty close, within 3 ticks. So we have a new high. Question is, does it hold? That is the all-time historic high. Now, we start out looking at the daily chart because institutional traders, the ones who actually move price because of the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. So no matter what you trade, whether it's the S&P, some other futures market, or maybe stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. So by spending just a couple minutes before you start your trading session with the daily chart, you're literally looking over the shoulder of the traders that actually move price. So we have a slightly higher high. Question is, will it hold? Now yesterday's close was 53.37 1/4. That gave us a slightly higher high. We've continued higher today to 53.49, but we're well off the high of the day. Now, if this step line crosses blue and climbing, we anticipate a retracement back to the BBC. We are above the highest weekly zone because of that CPI print yesterday, which was cooler than expected. They were anticipating a hotter number, came in cooler. No surprise, we're in a presidential election year. But you can see, after that move off of the CPI print yesterday, what have we done? More sideways. We've gotten real accustomed to sideways here of late. Perhaps this will change things. Now the vertical line separates today, Thursday, from yesterday, Wednesday. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. Now, based on the history of the last 15 years, there's a very high probability that by close of business tomorrow, price will be at or below this highest weekly zone. It's happened a handful of times over the last 15 years that we closed above the highest or below the lowest. Maybe 2 handfuls. And it won't be 15 years until December. But the step line is attempting to cross blue and climbing, printing a red candle. So we've got potential support right here at roughly the low of this candle, 53.28 1/4. If we take that out, then we expect support here. And then once we get below this area right here, You've got a window of opportunity to here. Then if we get below this swing low, you've got a window of opportunity all the way down to the short target. On the Dow, same thing. We have gotten above the highest weekly zone. This was the open last night. We made a run to the zone, consolidated. That's what happens 70% of the time. Now, on the first attempt to hit the long target, blue and climbing had gotten directly above price. When blue and climbing gets directly above price, it becomes potential resistance, because there's a very good chance that blue and climbing is going to turn into red and falling, which is bearish, and that's exactly what happened. Took us back to the VVC, where we consolidated for quite a few hours, and then 10 o'clock candle this morning sent us back above the highest zone, put in a high at 41.91, but we've got the step line crossing blue and climbing, which indicates a trip back to the VVC. Now this is support times 2, because you've got the VVC right at the weekly zone, which is 85/90. We'll see where we sit at the end of the day, and that will give us perhaps a good indication of where we'll be by close of business tomorrow. On the Russell, here's where we opened last night. Made a move higher. Then we got below the BBC, and then we right in here. Put in the low about 5 a.m. this morning. Now these lows are coming off these lows from yesterday. That sent us up to hit the long target to the tick. Resistance will always send the market looking for support. Now with the Russell, we're not above the highest weekly zone. Found support at the zone. That's what we expect. We got a bounce up to red and falling. And now we're headed back to the zone at 2106/2107. If we break this support at the zone, trade below the zone, and we should see the short target today. First, you have to anticipate support at the zone. On the NQ, here's where we opened last night, above the highest zone, and right up to the long target. Blue and climbing turned to red and falling, took us back to the BBC, and then we got one last push up, putting in a new high at 18,760.75. Now we're back to the BBC. The pullback holds more often than not. The step line is crossing. Blue and climbing hasn't had a chance to get up there yet. So I would expect this to be a case where price trades through the BBC. And you've got potential support here. And at the highest weekly zone, get below the highest weekly zone, and we can make a run to here, this low. And if we get below that low, then down to the short target. On crude oil, here's where we opened last night, and there again, when climbing becomes resistance because it's on its way to becoming red and falling. We consolidated briefly at the weekly zone, and then we came down the area of the previous bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support, and it was. Sent us all the way up to the zone at 79.50/55. We spiked it a little bit. If you look left, you'll see why. It stopped there. We got a retracement back to the BBC support, sent us up to the zone resistance, which is now sending us back to the BBC support. If we get below this area of the bullish cross, then you've got a nice opportunity to be short down to the zone. We get below the zone, then down to 78.20, and potentially 78.10 is right where bullish cross took place. On gold, this was the open last night. Made a run up to the long target. Actually, we came 3 ticks shy, but you only need a $1 move in the price of gold to get your goal for the day. So we come back from resistance, we come back to support. Remember, the pullback holds more often than not. You can see it here, 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 and again here, even here. Support, we ran to resistance. Resistance sent us back to support. We got the bearish cross. Red line gets below the green line. It's the opposite of bullish cross. We came down to the zone, which bounced us back up to the BBC. Finally got below the zone, and we didn't quite make it to the short target. Buyers came in, bid us up. You can see right here, red and falling has curled up and become blue and climbing. That's bullish. So I'm looking for price to trade through the BBC. So your areas of resistance overhead, this high. Actually, you've got 1, 2, 3. You got 4 30-minute candles, all basically the same high. So quadruple top. And a double top in the zone. And then the high of the session, which is 2402.70. Silver, here's where we opened, made a run up to the long target, and we've had some very messy moves across here. Came down to the BBC, had a little bounce. Whenever you see price on your 30-minute chart, above, below, it's probably time to go look for another market to trade, because that sort of wide-ranging consolidation is not good trading territory. Still got one zone left overhead. And on the euro, here's the open last night. Same thing, we ran into blue and climbing, which turned to red and falling, which gave us a bearish cross right here. Took us down to the zone at 670/675. Bounced us up to potential resistance. You see the pullback held here and here. This time we've traded through. We got blue and climbing to support us. So if you trade long from here, keep in mind this high right here, which basically is right where bearish cross took place. So we would expect that area to be resistance, and then here, and then the long target. That brings us all the way back to the daily chart, where not much has changed. Now, Michael should be joining us. Give us a recap of what happened in the live training room. See if he's having any trouble getting logged in. He shouldn't. He was able to log in okay this morning. Okay. While we wait on Michael, retail darlings GameStop and AMC continued their slide for a second straight session today, as the euphoria over the return of Roaring Kitty who was the central figure in the 2021 meme stock rally, fizzled out. Shares of the struggling video game retailer GameStop fell over 20% after jumping as much as $64.83 this week, while fetching $1 billion in losses for short sellers, according to Ortex Technologies. And AMC, the other meme stock, shed 13%, following an 88% gain since Friday's close. Also in news today, JP Morgan and Chase issued a statement saying that significant price pressures continue to influence the U.S. economy and may mean interest rates will be higher for longer than many investors are expecting. He cited costs linked to the green economy, remilitarization, infrastructure spending, trade disputes, and large fiscal deficits. Jamie Dimon, CEO, said there are a lot of inflationary forces in front of us. The underlying inflation may not go away the way people expect it to. The S&P 500 and the NASDAQ 100 both closed at record highs yesterday amid optimism over monetary policy easing after a measure of underlying U.S. inflation cooled in April. So all it took was one cool print. That's why, if you're watching via the YouTube channel, you already know the title of today's episode is this a bull trap? And it just might be. If you have higher rates, according to Dimon, God forbid, and stagflation, you'll see stress in real estate, leveraged companies, and private credit. Stocks are very high, and I think the chance of inflation staying high or rates going up are higher than people think. My view is whatever the world is pricing in for a soft landing, I think it's probably half of that. I think the chances of something going wrong are higher than people think. Dimon has been warning for months that inflation could be stickier than many investors are predicting, and wrote in his annual letter to shareholders that his bank is prepared for interest rates up to 8% and even more. Dimon said that a lot of happy talk is why markets aren't pricing these elements in. Even though a bigger surprise would be higher rates, Dimon said that geopolitics could create the main stress that we're worried about. Amid the impact those dynamics have on oil and gas prices, trade and alliances. Of course, we've got the war in Ukraine, situation in the Middle East, tension in North Korea, and the use of nuclear blackmail. Again, the geopolitical situation is very tense. So, let me see if I can find Michael so he can give us a recap of what happened in the live training room this morning. And then we'll go live on TradingView for 30 minutes. And a reminder, tonight is the members only workshop. If you have not, if you're a member, please have your questions ready. And if you've been on the trial and you've not responded to the email you received about becoming a member, call us at 949-42-EMINI or send an email to support@cfrn.net. All right, hang tight. Let me see if I can find Michael.
I'm here.
And there he is.
And here I am. Sorry, I was trying to get in as fast as I could.
No problem.
Here we go. Yeah, let me change my name. I didn't change my name yet.
There you go. Looks good.
Good. Okay. Here we go. Good afternoon, everyone. Today's Thursday. It's Thursday, the 16th day of May, 2024. Now, if you have not taken a free trial with us and you want to, just go here to mytradingq.com, the homepage right here, this big purple button. Click on that purple button. When you do, it's going to bring you to this page. It's going to bring you to this page, where all they ask for on this page is your name, your email, your phone number. Down at the bottom, if you have Ninja Trader, you can give us a machine ID. If you have TradingView, give us a TradingView login ID. I'll be able to set up your indicators for you before you start the trial. All right. Excuse me. You should do all this stuff at the beginning of your trial, so you'll be able to use the indicators during your trial. Okay. All right. Now, once again, I went over the time again this morning, and I ended up doing the training session more than the trading, but we still had a pretty good day. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 16th day of May, 2024. We made 66 ticks on the NQ, 2 ticks on the Russell, 27 ticks on the YM, and we're break even on the ES today. That put us at plus 475 on the morning session. We did manage to get our goal on the very first trade. It took us 6 minutes and 1 trade to get to the goal for the day. It was a 30-tick NQ trade that we had. It put us at 25.50 when we got the goal with 17 contracts on. We took a total of 16 trades. Again, that's 3 days in a row. We took 16 trades in the morning session. On the month now, we are at $4,112. And I was trying to bring this up so I could see it over here. $4,112, averaging $342 per contract through our business day. On the year, we're now at $37,847, averaging $406 per business day. So in the 2420 blueprint, if you were to stop trading when you get the goal for the day, the goal being $100 profit, and add 1 contract a month, assuming you achieve $2,000 per month in profit, add 1 contract per month. So far this year, you'd be on your 5th contract. And if you did everything just like I did, you would have only had to work 33.26 hours, and you'd be averaging $1,136 an hour for those 33.26 hours. That's if you started this year in January with 1 contract. If, like I did, you started in January of last year with 1 contract, you'd be trading 17 contracts now. You'd be in the 17th month. Same 33.26 hours, but averaging $5,970 per hour. Okay. So this is a perfect illustration of how it grows over time. This is a year in. This is 5 months in. All right, 1 year in, 5 months in. You can see how the difference is there, but 5 months in is still great. That's awesome for 5 months. All right, so let's get into the actual trades now. We'll start out here with the YM. We didn't have, actually the NQ we had the majority of the trades on. The YM, the ES, and the Russell, we had 6 trades altogether, I think. But we'll start out with the YM. Our first trade on the YM was right here. We picked up 2 ticks. The next one was right here. We picked up 5 ticks to get us to 7. And then over here, we picked up 20 ticks. That got us to 27. After that, I got into the lesson plan, so I wasn't really watching the YM all that much. I was really watching the ES during the lesson plan. That's why there's drawings all over it. So we had a green arrow there that worked out well, a green arrow there that would have stopped out, a green arrow here that would have been a break even. Then we get into the break. During the break, there was a blue arrow here that if you took it, the outer bands are kind of flat, but if you took it, depending on what your entry was, you might have had your stop at break even, maybe not. There wasn't much more after that. Now, we have high impact news come out tomorrow. I don't know what we had today, but I'll go check that in a minute. I know we have high impact news coming out tomorrow. We have the PPI coming out tomorrow. And it wouldn't surprise me if all this stuff that's happening today with all these new highs and all that stuff is already building in the PPI results for tomorrow. So I'm expecting tomorrow you might see a big drop in the market. We'll see. I'll get into that in a few minutes here. I'm just finished going through this. On the Russell, we just had a couple of trades. We had a break even right there and a +2 right there. So we ended up with +2. On the YM, we're plus 7, and on the Russell, we're plus 2. Got into the lesson plan, and I wasn't really trading it in here. You wouldn't want to take a short going into the weekly trading zone. Here's a long trade coming away from it that would have been okay to take. And during the break right here, there was just the one green arrow. There were no blue arrows during the break. Just that one green arrow that would have stopped you out if you took it. Okay, that was the Russell. Now the ES, we only had one trade on the ES. It was right here. We took a break-even trade on that. I thought we took a break-even trade in here. No, I didn't get filled. I tried to take a trade in here, but I didn't get filled. But this was all that I was going through with the lesson plan today. You know, we're looking at this and saying, these are the numbers. We started down here. So these are the numbers that it's trying to get to right here and right here. And then it did. And then I said, this is the next number. And it got to it. And then I said, these are the next numbers. And we got up there. And then once we got there, we were looking for the pullback down to here. Okay, so now that we're down here, we're below all these numbers are still there, right? This 5350 number and this swing high right here, those numbers are still there. Now, as we get into the new all-time highs, the target table is just going to disappear. If it's looking left and it doesn't find anything, it's just going to disappear. It's going to be a little tiny black dot. You won't see a thing, right? Because it's not finding any targets. When you're going short, there'll always be targets until you get down to 0. There'll always be targets going short. But going long, if there's nothing on the left side, there's nothing on the left side. Okay, so all these lines we drew in are from the lesson plan today. And you can see during the break, there was one blue-purple arrow right here that worked out well, and one purple arrow here that worked out well, and then nothing right there. Okay, and that was all for that. Now on the NQ, started out here. The first trade on this is where we got the goal for the day. This very first trade, we got 30 ticks profit on that one right there. That is where we got the goal for the day. The next trade, right after that, we stopped out, gave back 20. Then we worked our way back up. We got 8 there to get to 18, and then 12 there, I think, to get us back up to 30. And then 16 there to get us to 46. And then we stopped out again and put us back down to 26. And then we stopped out again to the tick on this one to get us back down to 6. All right, that was just about when I was starting the lesson plan. I took one more before the lesson plan to go from 6 up to 18. I got a 12 tick trade there to get us up to 18. Then I started the lesson plan. I was going through all these different things on the lesson plan. And during the lesson plan, I was able to take a nice trade right here. We got 30 ticks profit on that. That goes to 48. And also during the lesson plan, I took this short right here. And that gave us 12 more ticks and got us to 66. And that was all that we did in the morning session. During the break, you had a purple arrow here. It didn't really go anywhere. A couple of blue arrows that went somewhere, but after the first one didn't put in a lower swing, you wouldn't have taken the second one. This blue arrow went just enough to get your stop to break even if you got a good entry on it. Nothing after that because you had to put in a lower swing. Purple arrow here, put in a lower swing. Now the purple arrow means it's pulled back and it's hit the ribbon when the black line is in the right color and the outer band is red. Okay, that's what the purple arrow means. Pulled back and it hit the ribbon when the black line is in the right color and the outer band is blue in this case. Okay. It can happen in no trade zone. It's not really looking at the slingshot. It's make sure the slingshot is going in the right direction, but that's all. It doesn't have to go on the oversold to trigger. Okay. I just saw a lot of opportunities that were happening when the outer bands were the right color and you bounced off the ribbon with the black line in the right color. So I thought we'd make something for that so you can see them too. And you see it's given all these alerts here. This was the last alert right? It gave this alert on this one right here. And this alert on this one right here. All right. That's all part of the context PP, the most recent context PP. All right, that's in there. There was one other thing that I added into that most recent context PP. You guys may have seen it yesterday. I think I showed it yesterday. And that is, the ability to move that table around vertically. Okay, right here, table position vertical. You can move it around vertically, top, bottom, and center. Okay, you can move it left and right, left, center, right, and vertically, top, bottom, and center. Okay, that was a new thing that we just put in there. And that's it. That is what happened in the room today. All right, so let me start this. We're going to get into the live stream right now in YouTube. I guess the live stream has been going, but I'm getting to my part of the live stream right now on YouTube. Let me go over here and see if I already got it going. Looks like I already have it going. I have something going over here on YouTube. I have 2 YouTube things going over here. That's not it. How about this one? I think this is going to be it. What's it loads up here? Here it is right here. All right, so on YouTube right now, everything should be over here looking at me. I got it live, it's running, it's all good. So to take a free trial with us, if you haven't taken a free trial, go here to mytradingiq.com, click on the purple button right here. That purple button is going to bring you to this registration page where we ask for your name, email, phone number, and look, I spelled my name wrong. Name, email, and phone number. And down here at the bottom, you put in your machine ID. If you have it, you need to trade machine ID. And if you have TradingView, you use TradingView login ID. Hit the register button. Once you hit that register button, you will be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial, so make sure you click on that confirmation link. All right, that's that. Now, back in here to trading. I say confirmation link, you're not going to be sent the confirmation link. What am I talking about? My brain just went back 5 years. But when you do this, when you fill out this form, you're going to be sent everything you need to get into the room. All right. There's no confirmation link. We had to double opt in then. This, you don't have a double opt in. With this, you click register, and you're going to be sent everything you need to get into the room. There's no confirmation link. You really just go into the room from there. All right. So, the trading, back here to the trading. Yeah, Dwayne was just pointing out, if you want to see anything other than the stuff that we have shown right here, just let me know. Okay. I have to look at any other symbol. Look at Bitcoin today. It should have a move up. It did have a move up. Okay. It was a bigger move up than I was thinking we were going to have right now, but it's good that it's doing that. If we blow this up, like I blew it up yesterday, and oops, sorry, that's the wrong one. Blow this up. And this kind of junk after the all-time high, this kind of junk in here was what I was expecting. It happened after this time here, right? It's probably going to make a run right here and then drop down to go some more junk, just like the last one did. From right here, this is a head, and this is a shoulder, and this is a shoulder. So it's an inverted head and shoulder, and it's got the opportunity, the possibility of breaking a neckline right in here. Okay, if it breaks a neckline, then the next level up would be right up here, where the yellow line is. If we break that, then up here is what I'm talking about. Okay, 80,300 is what I've been saying for 4 months now, I think, or 2 months, or 3 months, or something. Anyway, since I drew that, I'm going to draw that 15th of March, so a few months. That's what I'm thinking. That's my thought on the whole Bitcoin thing. It's an inverted head and shoulder right here. It needs to break this neckline here at 67,600, 67,700. If it gets up above 68,000, I think we're going to be on our way up to the most recent all-time highs, and then probably break through that and keep going. That's what I'm thinking for Bitcoin. Okay. Now, I didn't really look at the other ones. Normally we look at some of the other ones in here when we're doing this. Look at MSTR. Now, Mr. really changed everything all around from what we're looking at before. Remember, I drew this in here in March. I said, this is the level, if it breaks down, that it should pull down to. And you can see it pull down to there, the 1st of May. And from there, I don't know. We'll see where it goes from there. This, I was drawing leg lengths in here. I'm not even sure it was for this chart, but I was drawing leg lengths. If it broke down and it started going down in measured lengths, and it hasn't done that yet. Okay, that was Mr. Mara was another one we used to look at on a regular basis. All right, I haven't looked at that in a little while. And Mara broke down below the channel that I had drawn in here. And when we broke down below the channel, it really went sideways to another channel, but I had drawn this level in here that it needed to stay above, and it's pretty much stayed above that level. And I drew that in there in January. saying I need to stay above that. And I'm pretty much sticking to that. I think it's going to. I don't think it's going to go down below that. Ethereum, we haven't really looked at. That's the futures. I don't want to really look at the futures. I want to look at here, the actual coin. Okay, so these were the levels here for Ethereum. I don't think it's going to break down to this level down here. It's right here's a spot that it's got to hold. If this doesn't hold, then that would be the next logical place for it to break down to, all the way down here. Okay, so down about $600 from where it is. I really don't see that happening either, but who knows? I kind of did think the 20,000 number was going to happen. I didn't think it was going to go through it like it did, but well, it did. Here, we'll go back to this, and we'll jump over here to this for a minute and just check our XOM today and see if we got the daily bounce. We did right there. Daily bounce, did that go a full $1? 11.1875 up to, nope, it didn't. 11.1930. It only went 50 cents. Did not go the full $1 today. Oh well, still money to be made. All right. If anybody wants to look at any of the symbols, I'm happy to look at anything you want to see. Okay. If you have TV trades, if you are in here and you're a passport holder and you currently have access to TV trades, that's going to go away tomorrow. All right. Tomorrow is your last day for free TV trades. Anybody that's got it right now that's on the trial, trials are ending tomorrow night. We have it all day tomorrow, but tomorrow night the trials are ending. Okay. If you want to take advantage of the stuff that's going on right now, you can just go here to Target View Trades, targetviewtrades.com, and I actually put some stuff in here today. I've actually done a lot of updates on this. If you go to properties in here, these are the properties that are associated with the TV trades. I've made individual videos for every property. Long buy arrows, short, sell arrows, risk reward ratio. Every individual property that you have with the TV trades, I made a video for it. I'm not done putting them all in here. There's one more that I have to put in. One more video that I have to put in, I think. Maybe two more. But you can go there and see all of that. There's a Telegram channel. You can join that right here if you want to join the Telegram channel. But the thing that I was coming here to show you was this. The next step, there are 3 ways to join, and here they are. All right. That is for anybody that's on the free trial right now. That free trial is going to end. All right. So let's see. We are in no trade zones everywhere here. You see the blue background? It's a no trade zone everywhere. I don't see any questions coming in about anything, so we're just going to trade something. We don't have anything to trade here right now, but for those of you guys that were in there this morning, we can go a little further with the analysis that we had here on the short side instead of on the long side. Now, this was all about reading the DOM. That's what all this information in here was. All these lines was about reading the DOM. So it's the ES DOM that we're reading at the time. And these levels down here were levels in the DOM that it looked like it was going to go down to. Right now, you can see it's just going sideways right here. So let's break it. Let's actually make it a little bit bigger time frame. All right. Here, let's look at it in a bigger view, but still here. So you're just looking at like the outer bands of here. You know, the outer bands is what I'm following with my eyes right now. When I'm talking about this bigger picture, I'm saying the outer bands are going up. The outer bands pulled back. The outer bands went up, exceeded the prior swing high, did not put a decent leg length in, and the outer bands are pulling back, but did not exceed the prior swing low. Okay, so this junk that we're in right here, if these outer bands get down below this level right here, this is just a way to look at the big picture with the small picture on your screen. If the outer bands get below this level right here, then you know you're really going to be in some chop, or it's just going to turn down from here. Okay, I mean, we're due for a decent retracement. We really haven't had a big retracement yet today. So we're due for a big retracement or some sort of a retracement. The way it's looking though, it's looking like it's going to try to push up some more. So when it pushes up, the outer bands need to get up above that level right there. Okay, does that make sense? If I just crunch up the small picture and just use the outer bands to illustrate the big picture, it's pretty easy to see, right? We can do it on either end. You can do that and that and that and that. And so what it should do right now is this on both of these, right? Okay, well, nobody's replying, but I'll just say, yeah, it's right. I know it's right. It's a rhetorical question, I guess. I would like an answer right now and then. But anyway, we are now still going sideways. We're in no trade zone on this. And if we look at the other markets, that was the ES. If we look at the other markets, I suspect they're the same way. Let's look at the YM. Now, the problem we had today is when it was up at the swing, up at the all-time highs, if you don't have any targets to the left, you don't have a table. It's just going to be a little black dot. You won't even notice it. It'll be like this period right here. You won't even notice it. You'll think the table's not working, but it is. If it only has 1 or 2 targets, it's because there are only 1 or 2 targets. Okay, the NQ's got a purple arrow along right over here. Now, again, the purple arrow along means it's most of the time, the purple arrow is going to mean this. All right, it's going to be this part right here. It's going to be either a long trade without the slingshot or a short trade without the slingshot. That's what it's going to be most of the time. All right. Now, those trades happen enough that I wanted to put an arrow on it to illustrate that it's there a lot. Those purple arrows, that means price came back and it hit the ribbon and the outer band is the right color. Those are usually really good trades, especially if you get the blue arrow with it, because the blue arrow means you came out of the oversold or the overbought at the same time. Okay, so there, crap, I took the purple arrow. Here it is. I'm sorry, I didn't even bring it over and show you. Let me lock in some profit on that. Lock in 8 ticks right there. Now, let's see. I want to go show you something else on the larger time frame on the 30-minute chart. I'll show you that in a minute. Okay. I want to see who is in here. Joseph. Besides the DOM, do I ever reference other order flow? No, I do not, Joseph. The only thing I reference that is not on these charts is the 30-minute stuff on these charts right here. Okay, that's the only thing I reference that is not on those charts. Okay, I don't go look at anybody else's stuff. I mean, we don't need to. Our stuff is pretty darn good. We don't need to look at anybody else's stuff. We don't need to look at order flow. I mean, you can put all that junk on there if you want. On your DOM, you can click this thing right here, and it's going to have all that stuff. Now, that may be useful information to some people, and I mean, it is to some people. Some people really use that stuff. I don't. And it might work for them. The 30-minute ES step line turned down, hitting the blue. Let's go to the ES. Hold on. The step line. Here it is. Okay, here it is. Let's go to the end. So you're saying it hit the MA1 when it turned down right here. Let's blow this up a little bit. Right here. Okay, so it is hitting the black step line, is hitting the BBC, is hitting the MA1 right there. This bar right here is going to be a significant bar down. Where this bar closes, this half-an-hour bar, if it closes above the MA1, that's a big deal. It's probably going to go up to probably challenge the highs. If it does not close up above that, then we could be sideways for a little while. My opinion, and this is all it is that this is all the PPI stuff that's going to come out tomorrow already in the market. That's my opinion. I think when the PPI comes out in the morning, we're going to have a lot of fluctuation. We're going to end up right back where we start out the morning, wherever that happens to be. I don't know where that's going to be. We still have a good 4 hours left in the trading day, almost. So I don't know where that's going to be, but wherever we close today is where I think we're going to end up at the end of the day tomorrow. But I think that all this is building the PPI and the CPI. The CPI is coming up tomorrow. Is building the CPI in ahead of time, and I think we're going to get a big fluctuation that's probably going to go down and then come right back up. Is what I'm thinking. I don't know. If I were going to chart it, using all the stuff that we normally use, which I will do. I'll do that for you right now. Given the information that we have that's in front of us right here on this chart. Hang on, I need to go over some more on this. All right. So it's kind of messy the way that it all came together. But given the information that we have, if we go from this low way over here, sorry, I meant to grab this. If we go from this low way over here up to right about there, that's the high. And we bring that over and we drop it on here. Where does that put us? Well, it's actually gone through that. It's gone through that. So, but I think that this is a good gauge for what could happen tomorrow. When the news comes out, wherever we are at the end of the day, I think this is going to be a good measurement of the kind of volatility that we're going to get when the news comes out. That's what I think is going to happen. All right. I don't know whether it's going to be up or down, but I think this is going to be a good measurement of the kind of volatility that we're going to get. Now, normally I would grab it from over here and I'd say this is going to be it, but I think we've got a little bit extra right there. I think this is a better gauge of what's going to happen. Now, Don, you've been with us for over a year now, so you know that normally we don't close outside the weekly trading zones. We don't close the week outside the weekly trading zones, and all the indices are outside the weekly trading zones right now. So it would surprise me if this does do this kind of fluctuation up outside, even further outside the weekly trading zones. That would surprise me. That would be really, really unusual for it to do that. It would not surprise me, however, for it to do the fluctuation from wherever we close today down. And look where that lands right there at the weekly trading zone. I don't know that that's going to happen, but that is certainly a viable scenario. Okay, that's just my thought. You always ask me to go over the 30-minute stuff on these. That's what I'm thinking. You could buy some puts right now and probably be worth a bunch of money tomorrow morning. Buy something really cheap, way out of the money, and it'll probably be in the money for a short period in the morning. But the volatility, 2 years. I knew it'd been over a year. 2 years in August. Yeah, I knew it'd been over a year. But that's it wouldn't shock me to see that wherever we end the day. This is my gauge of volatility. Right. So that's my VIX. Be a mix, not a VIX, mix. My index, my volatility index. What was it today? Am I missing this all up? More econ calendar. I thought the high impact news was coming out tomorrow morning. Wednesday, Thursday. I thought we had Friday right here. All this. I guess we don't have high impact news. It's the European CPI that's coming out. We don't have the high impact news. It's European CPI. Okay, well, when the CPI comes out. It didn't come out yet, did it? May 16th. We had all this Philly Fed stuff. I haven't been paying attention to it since the PPI came out. I haven't been paying attention to it because usually the PPI comes out and then the CPI comes out right after it.
The CPI came out on Wednesday.
It did come out.
Yeah,
it came out.
We talked about it on Monday. Bloomberg was predicting that it would move the
Okay.
S&P 500 a substantial amount, and it did.
And it did. Okay. Well, then all that stuff that I said, that is still my volatility index. That's my index. But the CPI that I was looking at was this here. It's European CPI. So we don't have any high impact news coming out tomorrow. So that's probably not going to happen at all tomorrow. Yeah, thanks for pointing that out. Michael R. I thought we had CPI coming out tomorrow. I've been thinking about it all week. I haven't think about it that much, obviously, but but I was looking at the chart. This is what I think is going to happen, though. I'm sticking with this. I don't know if we're going to get it all in one day, but I'm sticking with this. All right, we're going to get back down to this level, especially now that I know we don't have CPI. Before I was thinking it might go up or down. Now I think it's going to go down. That's what I think. And look, it's already started. This bar right here has already started. While I've been talking, it made that big move down. You notice right here, it's already begun. All right, so let me get in here and take some trades if we can. There is a green arrow short right there on the NQ. I'm going to hit break even on that, and I'm going to slide it over so you can see it. Here it is. All right, I'm going to lock in 4 ticks on that, and that should go down and exceed the prior swing low if it hasn't done that yet. Thank you for pointing that out, Michael R. But I'm sticking with all those, everything that I just drew for you on the chart, I'm sticking with it. But now I know that I really don't think it's going to go up. I think it's going to go down. Between now and that time tomorrow, I think that's what we're going to see. This weekly trading zone down here, probably by the end of the day tomorrow, is what I would bet. It gives me even more confidence in it now that I know we don't have CPI coming out. We don't have our CPI coming out. For some reason, I thought it was, well, I know it's because I saw CPI and I didn't realize it was European CPI, the Euro CPI. But that's what I'm thinking. If I were gonna do anything, I'd be buying puts right now, expecting it to get down to here. If it doesn't happen tomorrow, it's going to be happening pretty soon. This is all irrational. It's got to retrace it all at some point, at least half of it. And if you do the whole thing, if you do the whole move from here all the way up to here, look at that. Where's that midpoint? Right there. Right there. That's perfect. So I thought we had CPI tomorrow. I feel like an idiot now. That's okay. We do have CPI. Well, we don't, but the Euro does. But I'm sticking with what I said. That's good chart analysis. All right, so I got 4 ticks on this. It's got to put in a lower swing now to be able to take another trade in that direction. Okay, we did put a lower swing in here on the ES. We put in a lower swing here on the Russell, and we did put in a lower swing over here on the YM. So everything is starting to tank. Get ready on the NQ again for another trade. We're in the overbought. We haven't hit the black line yet, so it could still be a blue arrow. Now it's going to be a green arrow because it did hit the black line. There's the green arrow because it did hit the black line. That's short. I'm going to break even. I'll bring it over and show it to you. Here it is. Now I'm going to lock in a little bit of profit, and we'll get 30 ticks or 4. 4 is what we got. Okay. That should put in a lower swing, and when it does, like that, we'll get another shot at it. Huh. Look at that. It's all happening right now. And I have all these alerts. I have all these alerts that are set up. I can't show it to you right now, but I have a layout called the FANG layout that I actually stuck out in this Telegram channel that I created right here. Right, a lot of you guys have access to this. It's the Target View Trades Telegram channel or TV Trades Telegram channel. I stuck the layout right here. This is a FANG layout. It has a whole bunch of alerts all set up in it. So if you put that on, it'll have all the alerts. It doesn't matter what level of, well, I guess it does matter what level of trading view you have, but pretty much all levels will allow the number of alerts that I have set in that. Okay, because right now my phone is going nuts, and I'll show you what. I'll show you what. My phone is doing. Hang on. with the alerts that are going off right now. Hang on, I'm doing Telegram. I can Telegram it to myself now. There it is. Send it to me. And now, here, this is what it's looking like on my phone right now. Buy condition met 1 minute ago, alert on QQQ. You got a short there. Something there. I posted a video, alert on Meta, possible buy soon. That was 6 minutes ago. There was a possible buy soon on something else. Just a few minutes ago, all these things are coming in from the FANG alerts. If you guys have the TV trades, you can just go and download that from the TV trades channel. All right. So on the ES right now, we pulled back too deep to get a trade. I think if we get an up close, I think the green's going to get into the black. If we get a down close, it's still too deep of a pullback for me to really want to do it. Same thing here on the Russell. The YM is obviously too deep, and the NQ is trading in the other direction already. Right? What time is it? 1:27. Wow. Okay, so let's go look really quick back over here at the 30-minute chart. Is this the right 30-minute chart? No, that's not the right 30-minute chart. That's a demo gold chart. Here, this is the right 30-minute chart. This is it. So we went down, right down to here, same place it was buying pressure before, and it's got buying pressure there again. I think when it busts through that, it's wide open going down here, guys. So we'll see what happens. I mean, this quick movement that we just had right here in this half an hour, I think that's a signal that something bigger is going to happen here pretty soon. All right. If we narrow short there on the ES, okay, that's a pretty deep pullback on the ES. That's the deep pullback that I was just telling you about that I didn't really favor that much. Over here on the YM, we're right inside the weekly trading zone, so I don't really want to take that. The CS, it could possibly work out. The DOM is suggesting, the DOM is actually kind of even right now. It's got numbers up at 34.50 and it's got numbers down at 29.75. Okay, down at 29.75. 29.75 is what I said right there. That was part of what we went over this morning, how to read the DOM. That was part of today's lesson plan. Those of you guys who don't know, who haven't been in the morning session, we have a lesson plan that we've been covering for years now. I'm going to have to change it around a little bit because as you know, you guys come up with new stuff and I add new stuff. There's more stuff to describe. But day one is bar types, the range charts, just basically stuff about the charts themselves is day one. Day two is more about detail about the indicators that we use. And day 3 and 4 is more about how to read the markets using the indicators that we use. Okay. And yeah, so that's all that. And I've run out of time again. Man, my days are just flying by. Just flying by. All right, that is it, guys. I am going to wrap it up for this session. I can pass it back out to Fabulous Phoenix, Arizona in a minute. I just want to show you one more time. If you haven't taken a free trial, go here to mytradingiq.com. Click on this purple button right here. Sign up for the trial right there. When you sign up for the trial, you'll be brought to this registration page. All we ask for is your name, your email, your phone number. If you have TradingView, give us a TradingView login ID. If you have NinjaTrader, give us a NinjaTrader machine ID. If you have both, give us both. Right? We'll set you up on both of those for your trial. And that is it. With that, I can pass it back out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Recap of the morning session.
Okay, and one thing I forgot to say, it's Thursday. We do have a partners meeting tonight at 8 p.m. The recap of the recap took 6 minutes and one trade to get to $2,550 this morning. 6 minutes and one trade. You get to 25.
Good job.
Thank you. Thank you, everybody.
All right, guys, we made it through all the markets, and you can see what's happened since the show began, or the broadcast. We were roughly at the high of the day, 53.37 and a quarter, and we're now well off the high of the day. As you can see, we've dropped below the long target. Got potential support here at the zone 25/26. By close of business tomorrow, based on the last almost 15 years of history with the weekly trading zones, we will be at or below the highest weekly zone. Dow is getting back below the highest weekly zone. The Russell is well below the highest weekly zone. It's at this zone. And Q working its way back below the highest zone. Crude about to run into some resistance here at blue and climbing. Gold consolidating at weekly zone. And as you can see, the pullback to the BVC holds more often than not. But now the red and falling has turned to blue and climbing. We've consolidated. We do 70% of the time. There's a good chance for a move up. Got to get above this high. So 23.90, 23.91. That would be enough to get your goal for the day. But watch out for this bearish cross right here. Okay, it's where the red line gets below the green line. That is almost always good resistance first time up. Whenever you have a bearish cross that leads to an extended move, or a bullish cross that leads to an extended move, first time price revisits that area. Will almost always be good resistance on a bearish cross, and almost always good support on a bullish cross. Silver, still wide-ranging consolidation sideways. And the euro. Gotta watch this area right here. Bearish cross took place. The euro's trying to move higher, but now it's got to take out this high, and then it runs into a potential resistance right here. If it can get above this area, then there's enough room to get your goal for the day up to the high of the day. For now, it's just consolidating sideways. It has been now for 2.5 hours. And we're well off the high of the day. As Michael said, we've got a members only workshop tonight, 8 p.m. Eastern. Members, have your questions ready. And you've been on the trial and you've made your decision to become a member. Check your email. Got an email special offer. Can't find the email, call us at 949-42-EMINI or send us an email at support@cfrn.net. As a passport holder, you get 2 hours of live training every trading day. Plus, private one-on-one mentoring, no additional charge. Strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. Support, resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Also, as a passport holder, you'll receive the Logic 247 alerts, the concierge trade alerts, the trading zones, And you'll be able to attend Members Only Workshop every Thursday night, 8 p.m. Eastern. All that and more. Everything a trader needs, all under one roof, at one low price. Let's wrap it up with our good word for the day. John 4:15. Give me this water so that I won't get thirsty. The Samaritan woman tried to fill the emptiness in her life with multiple relationships, but it didn't work. When you try to find in anyone else what can only be found in Christ, you place so much stress on the relationship that it will break under the weight of it. Why did Jesus say in John 4:18, you have had 5 husbands, and the man you now have is not your husband? Because one of the first things hurting people need to do is break the pattern of using other people as a narcotic to dull the pain of their inner void. The more you medicate the symptoms, the less chance you have of allowing God to treat the cause. The other dysfunctional tendency that can exist is that you keep increasing the dosage. When you become increasingly dependent on others rather than on God to create a feeling of wholeness in your life, you're abusing your relationships. Clinging to people is very different from loving them. It's not so much a declaration of your love for them as a crying out of your need for them. Like lust, it's extremely selfish. It's taking instead of giving. Jesus quenched the Samaritan woman's thirst with his word, saying, whoever drinks the water I give them will never thirst. Indeed, the water I give them will become in them a spring of water, welling up to eternal life. John 4:14. And she went back home, totally changed. That's what Jesus does. Listen to her testimony. In verse 29. Come see a man who told me everything. And what Jesus did for her, he will do for you today. And that's our good word for today. Thanks so much for tuning in. Whoever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.